Holy smokers, ladies and gentlemen, we got a lot going on out there in the stock market world today. We got to talk about some of the biggest news stories in the stock market here today. One is involving Amazon and a big competitive move Amazon has made here today. We got to talk about Apple and some bad-ish news regarding Apple around the new iPhone XR. Also some analyst downgrades. We're going to kind of look at all that. We got to talk about Warren Buffett and Berkshire Hathaway. We're going to kind of view their numbers. They just reported over the weekend. And also a move Warren Buffett has made that is a very, very big move. And then lastly, we'll kind of talk about Netflix stock and around a rare double upgrade of a Netflix stock here today, guys. So I hope you enjoy this. As always, hit a thumbs up. Amazon, let's get started off here with the Amazon news. So Amazon just ratcheted up the war for holiday shoppers with an unprecedented promotion, all right? Amazon is offering free shipping to all customers for a limited time starting here today on Monday. It marks the first time in recent memory that Amazon has removed the minimum order requirement for its free Super Saver shipping tier, okay? If you didn't know, Amazon in the past had usually like around a $39 price point you had to hit. So you basically had to buy $39 worth of stuff. Then you could get free shipping, okay? It wasn't free 2-day shipping, but it was free shipping in general, all right? And now they've taken off all that, and they had already moved it down to around $25. Now they completely removed that, and it's like anything you pretty much order off Amazon, especially most popular items, you're literally going to be able to get free shipping regardless if it's a $5 thing, $10 thing, $20 thing, or anything, all right? This offer applies to Amazon's delivery window of 5 to 8 days. From when an item ships, Prime members will still get their stuff in 2 days. Now, I've played around with this in the past because my wife has an Amazon Prime account. I don't have an Amazon Prime account. So in the past, I've tried to just order some things from my account, which is not a Prime account. And what I found is they still get here within 2 or 3 days most of the time. Like I find that the things don't necessarily always get here faster with her account versus my account. It's usually still way faster than like that 5 to 8 days Amazon says it takes. Something to just keep in mind there, all right? Now we know Target just made a similar move about a week ago in regards to the same thing, okay? So Target's battle plan for the holidays. Target for the first time ever will offer free 2-day shipping with no minimum purchase required starting November 1st and running all the way through December 22nd, all right? So this is getting competitive. Now, I think, honestly, this is probably where we're going to move long term in the whole retail landscape. I think, it's just getting more competitive as far as the shipping goes. I think, the big retailers like Target and Walmart are kind of viewing Amazon as, kind of realizing how big of a threat Amazon really is. And they're like, man, we got to just offer free shipping no matter what. I think Amazon says, hey, if they're going to offer free shipping no matter what you order, we got to pretty much match that. We got to do the same thing. We're not going to let them undercut us, okay? Amazon's, famous for kind of like trying to give a better value than Walmart or Target or anybody else can. If all of a sudden Walmart and Target start offering free shipping regardless of what you order, Amazon's pretty much got to match that. Jeff Bezos does not want to get beat in any competitive category. So this is shaping up to be a very, very interesting retail holidays. This is going to hurt everybody's profitability. And if you're offering free 2-day shipping or just free shipping in general, regardless of the item size, like these guys are going to end up getting hurt, at least as far as their profitability somewhat. It's a retail war as it is every holidays, and it's just moving more and more onto an online retail war rather than more of a traditional landscape, all right? Now let's go ahead and talk about Netflix. So Netflix gets a rare double upgrade, and analyst urges to buy. He says the stock's going to go up massively from here. In a rare move, Buckingham Research raised its rating 2 notches to buy from an underperform, okay? So basically you have a market perform, which is kind of like in the middle, underperform, which is, below a market perform. Then you have a buy, which is above a market perform. So this is a double upgrade, okay? These are pretty rare from analysts, saying that while it was previously cautious on its elevated stock price, it still believes it's a top-notch option. We have always viewed Netflix as a continued top streaming category winner. The analysts wrote in a note to clients on Monday, we are increasing our price target to $406 from $349, providing 31% upside, all right? Big upside that analyst is saying there. The stock didn't really react much here today as far as Netflix stock went. Netflix has a lot of competitive threats coming in 2019. And if you're looking at it just from a stock price perspective, not even talking about the fundamentals of the company, just a stock price perspective for Netflix in 2019, I think it's going to shape up to be a super competitive year with Apple potentially launching, more streaming services around their video content, with Disney launching their streaming app and taking that more and more serious. I think all these competitive threats coming in a massive way in 2019. If you're looking at it from a stock price perspective, I would say it's a little scary, okay? And sometimes these analysts say, oh, well, Netflix, they could just raise prices and that would help out their profitability. And I say, okay, let's see it happen. Let's see Netflix go from $12 a month that might charge a customer to $20 a month. And let's see how many people stick with that versus cancel and whatnot. Let's just, let's see the proof in the pudding at the end of the day. So if you're looking at it from a stock price perspective in terms of Netflix, I think it's a tough year to get a massive stock price move just because all these competitive threats are going to come in. There's going to be a lot of worries around that. Never mind that, Netflix growth is going to start to slow even more in 2019. So that doesn't bode well with that. All right, now let's get into Apple stock here. So Apple fell around 3% today. We know it fell, obviously on the earnings day around 7% on Friday. So 7% on Friday, another almost 3% here today. This is on the back of a few things. So one, Rosenblatt Securities downgraded Apple stock in a note to clients on Friday from a buy to a neutral, advising the clients that it would be difficult for Apple to offset weaker volumes with higher selling prices for the second half of 2019. Calendar fourth quarter guidance reflects our cautious view on weaker than expected sell-through and production reductions for the iPhone XS, XR, wrote the analyst, okay? We downgrade to a neutral, all right? So I want to do a few calculations here, okay, and kind of work out some numbers on the calculator, all right? So Apple sells around 220 million iPhones per year. Let's assume for a minute that in 2019, Apple sells 20 million less iPhones in 2019, all right? So that would make it for around 200 million iPhones sold in 2019. So let's say Apple which is a pretty conservative number. Let's say Apple only sells, which is a ridiculous number, so at the end of the day, Apple only sells 200 million iPhones in 2019, okay? A very conservative number, all right? Now, let's keep in mind here, if we're doing, let's say 20 million less iPhones times an average selling price of $650, which was average selling price just a couple years ago, all right? The average selling price of an iPhone was around $650 just a few years ago. That's $13 billion in revenue that Apple's essentially missing out on by, raising their average selling prices over the past few years, all right? $13 billion. Now, if we go ahead and take that 200 million number, okay, the 200 million iPhones sold this year, and we go ahead and add an extra $250 of average selling price, because average selling price used to be $650. In 2019, it will hit around $900. That's a $250 difference. We take 200 million iPhones, times it out by an extra $250 per iPhone, and we get a $50 billion difference there, guys, and we can understand why Apple doesn't necessarily care if iPhones were to shrink a little bit or if they just stayed stagnant or they just slightly grew, because at the end of the day, the average selling prices have gone up so much, they've helped out revenues and profits so much. So Apple's in one of those situations where, like, who cares about trying to chase, and sell 230 million iPhones this year or 220 million iPhones this year. If we can just sell 200 million, it's still unbelievable at an average selling price of $900 or somewhere around there, guys. So that's something to keep in mind. I don't think analysts are really paying attention to that. These average selling prices, they can just keep iPhones stagnant. Like, that's a massive win for the company, all right? Now, also, this is a news that came out here today. Apple has told its smartphone assembler Foxconn and Pegatron to halt plans for additional production lines dedicated to the iPhone XR, which hit shelves in October, the very end of October, I think October 26th to be exact. The Nikkei reported on Monday. Apple had also asked smaller iPhone assembler Winstron to stand by for rush orders, but the company will receive no orders for the iPhone XR this season, the report citing. For Foxconn's side, it has prepared nearly 60 assembly lines for the Apple's XR model, but recently uses only around 45 production lines, as its top customer said it does not need to manufacture that many by now. Okay, this is all coming out according to the Nikkei. Now, this dropped all the Apple suppliers out there. They came back quite a bit, but Cirrus Logic got hit on this. Cuervo got hit on this bad. Skyworks Solutions, Universal Display, everybody across the board got hit. They came back quite a bit in the trading day. Most of them finished around 1 to 3% type downside moves. But needless to say, this hit all the Apple suppliers. This hit Apple stock again here today. And we don't know how much truth to this is. We always hear things about maybe Apple reduced the amount of iPhones they're going to make or something like that. We never know how much truth there is to it. iPhone XR, in my opinion, will be the top volume seller for iPhone in 2019. We'll have to see if that comes true. But in my opinion, in 2019, I think iPhone XR will be the top selling iPhone. That's the one that starts at $750, 6.1-inch display. It's more of a budget-friendly model compared to the other models that start at $1,000 and $1,100. So, and also I've seen a lot of promotional activity around the iPhone as far as Sprint's doing a move over there, T-Mobile's making a move there as far as offering the phones for free if you trade in a certain phone for $40 a line and whatnot. So I think that one will still sell well. The question is, maybe Apple got too bullish on it, or maybe this report is just a bunch of FUD. We don't know at the end of the day, unfortunately. I would say there's some credibility to this report. As far as me looking at it from an Apple stock perspective, if they had 60 lines, 40 lines, 50 lines, like it's all good sales in the end. And like we talked about, literally, as long as they keep Apple's, iPhone sales stagnant, or if they just shrink a little bit, it's phenomenal, okay? And if I look at the competitive landscape, there's no one out there really taking market share from Apple. Samsung's numbers have been horrible for their smartphones, okay? Google's trying to come in the game a little bit, but they're just taking some Android market share. So the whole smartphone industry right now is kind of in a drought, and honestly it probably will be, like I said, until 5G hits. When 5G hits, that's the next growth vector in my opinion for the smartphone category. All this, let's increase the screen size a little bit, let's make faster chips. I don't think any of that's causing mass amounts of people to say, I've got to get that iPhone, or I got to get that Samsung, or I got to get that Google Pixel or something like that. People now are just kind of upgrading when they need to upgrade, and until 5G hits, we don't really have a massive growth vector for smartphones. All right, now let's talk about Warren Buffett and some moves out there. Okay, so billionaire investor Warren Buffett was putting money to work in stocks this summer, including Berkshire Hathaway's own shares. The Omaha, Nebraska conglomerate bought nearly $1 billion of its own shares in August alone. Okay, in August alone, they bought $1 billion worth of shares. All right, their earnings came out, and these were pretty amazing earnings out of Berkshire. Berkshire's total earnings in the quarter came to $18.5 billion, were a near record for any company, trailing only Apple's $20 billion in the quarter they reported back in the Christmas quarter, okay? The huge earnings reflected paper profits on Berkshire's $218 billion equity portfolio that must be reflected in the quarterly results under the new accounting rules that took effect this summer. All right, CEO Buffett urges investors to focus on the operating earnings, excluding the realized and unrealized investment gains, which I agree with Buffett on that. Those results were stellar as Berkshire's insurance operations benefited from a relatively mild hurricane activity season this season versus last season, when 3 major storms hit, including Hurricane Harvey. Insurance operations swung to a $2.1 billion profit from a $1 billion loss the year ago. Burlington Northern Railroad, their big railroad they own, showed a 10% gain in operating profit to $1.9 billion. Absolutely amazing numbers there. As far as Berkshire's stock price, it moved up a little under 5% today. A nice move for Berkshire Hathaway stock there. Buffett is kind of looking at this right now, and he's saying, okay, I got all this money around right now. I could be spending it on buying other companies. I could be buying other company stocks that are public companies. Or maybe my company is the best deal out there, and I think Warren Buffett kind of views, and Warren Buffett historically has not been a buyer of his own stock, okay, Berkshire Hathaway. He very rarely has ever went out there and bought a lot of his own shares of Berkshire Hathaway stock, but I think the way he views it right now is he views his company as one of the best deals out there, and I think that's a bullish sign for a couple reasons. One, obviously, buybacks should help EPS over time as long as a company can produce the same type of net income, or net income can go up, but not just that. If Buffett, the great investor himself, is viewing his own company as one of the best stocks to buy right now, and he's actively putting his money to work buying his own stock back, right? Then that's probably a pretty bullish sign for Berkshire Hathaway in general, that you have Warren Buffett, who historically is not a big buyer of his own stock, say, right now we're at a very, very good deal. And if you're looking at this from a long-term basis, this is a steal at these shares right now. So I think that's very interesting. Berkshire Hathaway has kind of been one of those stocks that has kind of been pushed to the side while these tech giants have kind of risen over the past few years. Amazon, Apple, Google, Facebook, those big tech giants have just kind of been going up and going up. And Berkshire Hathaway just kind of been pushed off to the side because it's not really a tech company. But then you start to look at some of these earnings and they're absolutely amazing. And then you start to view how many great investments he's made over time that are on the balance sheet but don't really show up on the income statement because they're just kind of sitting there as fabulous, fabulous investments. So very interesting company, needless to say, Berkshire Hathaway. I've actually never bought Berkshire stock, but I really need to look into it deeply, because if Buffett's out there buying shares left and right, then maybe it makes sense for me to as well, guys. Let me know if you got an opinion on any of these stocks talked about here today: Apple, Amazon, Netflix, Berkshire Hathaway, Warren Buffett in general. I would love to hear from you guys in that comment section. As always, thank you for watching and have a great day.